Hi there, it's Louise Harrington here from Performance Accountancy, and we are going to quickly look at when you have to pay your self-assessment tax return bill. People are often worried that if they do their tax return early, then they need to pay their bill early, and that is so not the case. But if you do your tax return early and the taxman owes you money, you get that fairly quickly. So sometimes it's better off to do your tax return early, get some money back, and you go, woohoo, I'm in the money, go shopping. So, well, that's what I would do anyway. Okay, so there's a lot of information on here, so I will go through it very slowly. So the tax year ends on the 5th of April, and a new tax year starts on the 6th of April. Funny that. So you can do your tax return any time between the 6th of April and the 31st of January following. So therefore you can pay your tax bill any time between the 6th of April and the 31st of January. But obviously, in order to pay the bill, you actually have to have submitted the tax return first. Don't forget, you do have to submit it, not just fill it all in, get the calculation, get a copy of the return. There is a button that says submit your tax return. Okay, so HMRC do not send an invoice, they don't send you a bill. Sometimes they do send a statement. If you've done your tax return by the end of May, beginning of June, you might get a statement at the end of June showing you want to be paid by July. And the same thing, you might get one in November if you've done your tax return in October or maybe early November. But it's not guaranteed. So whatever you do, complete your tax return, keep a copy of it, make reference to the calculation, but always, always, always make sure you have access to your online account, and then you can see how much you owe HMRC, so you know what to pay. Okay. So I've mentioned a few dates there all of a sudden, and you think, whoa, what's going on? So the 31st of January is the deadline for the tax return and for the payments. But you have to be aware on the payment date does vary slightly. So it depends on what method you use to pay it. It might be a case of if you do it by bank transfer on the 31st, so it effectively leaves your account on the 31st, but that happens to be a Saturday, HMRC will include that as they received it on the 31st. But if you wrote a cheque and posted it on the 31st, and it doesn't get received until the 3rd of February, they might class that as being late because they hadn't received it. So be very, very aware on the method of payment and how early you have to then pay the bill to reach HMRC by the 31st of January, or for it to be included as received by the 31st of January. Okay. So what do you have to pay by the 31st of January? Well, this is what we call your in-year tax bill. So this is how much you owe them based on the tax return you have done for that year. Don't forget, it's always going to be 9 months late. So at the moment, we've just started filing for tax year 2020-21, which has to be done by and paid by the 31st of January 2022. So the in-year bit is how much you owe for the tax year 2020 to 2021. Okay. There is a case of if you owe HMRC more than £1,000 of income tax and class 4 national insurance, then you will have to pay what they call the first payment on account. Yes, I know it says FIST. Ever so sorry, I'm not going to change it now. But if applicable, you have to pay the first payment on account for the next tax year. So if you owe more than £1,000, you have to pay 50% of what your tax bill is. So therefore, you can look at it, oh, my in-year tax bill is £2,000. You have to pay 50% upfront of that amount again, which then makes £3,000 to be paid by the 31st of January. Okay, there is a second payment on account, the extra 50%, that has to be paid by the 31st of July. Now, one thing people do forget is they've made a payment on account, so therefore, come the 31st of January, the following year, they can deduct the payments on account they've already made for that tax year. I know this gets very complicated. It will be much easier with numbers and figures and a demo in front of you, but we don't have those facilities. So 31st of January, you have to pay the in-year tax bill and also potentially 50% of the following year's tax bill. HMRC always assume your income and therefore your profit will be the same year on year. Pretty obvious for some industries that have been tied down and not able to work. That is not the case for 2021-22 or 2020-2021. So my advice is always then, okay, get your tax return done earlier, and that might reset how much you have to pay as a payment on account for the 31st of July. And potentially, you might have already paid enough to cover all your tax bill for that year. So if you do your tax return by, say, the end of June, it might make the July payment go down. It might make the same, but it definitely won't make it go up. You never know, you might get a tax refund. I'm quite sure this has not made too much sense to some people, so by all means get in touch. But there are other videos you can look at to help explain some of the things I've just talked about. So what we've got here is what is the payment on account. So it's better explained in the video. You can see the link on display. How to find out how much you owe HMRC. You can use your online account to do that. And there's a video link to show you how to get into your online account and how to see how much you owe HMRC. And there's also a video on how you can pay HMRC, the different methods, and I think it also goes into what is considered paid when you actually make the payment. So is it based on the date you make the payment, or is it based on the date received by HMRC? So I hope that helps. So your definite payment dates are the 31st of January for your main tax bill, and any payments on account will then be the 31st of July and also the 31st of January. Any problems? Feel free to give us a bell. Bye then.